The US dollar rate has now reached to around high of around 91 rupees per dollar recently. So the rupee is depreciating and dollar is appreciating continuously. In the past 1 year, around 6.5 percentage the rupee has depreciated. We will see what is the impact of this and why this is happening in this video. Okay, let's understand how this dollar and rupee are traded in the exchange, in the forex market. Then only you will be able to understand why there is an increase or decrease. Just like a market, stock market or any other normal market where you go and buy some product, like that only there is a market for the forex, that is the foreign exchange, dollar and rupee, where you can go and buy rupee if you want, where you can go and buy dollars or any other currency. How that is done? By giving the exchange currency. You give rupee, you get dollar, like that. You can exchange your currency for a price. That price is only the price which you see, the dollar rate, the rupee appreciation, depreciation. This is the price which you see in your everyday. When you check what is the rate of the dollar, what is the rupee per dollar, all those rates you can see. So there is a market for it where they do trading, through which this price is derived. First you should know this. Now second thing, this market is impacted by the various economical factors and various government decisions taken by the various economies of the world, especially the United States of America, because it is their currency. Now why the US dollar is only mostly increasing and not depreciating? This is happening because the US has dominated the international market by making all other countries trade in US dollars. That is, if you want to buy some product from other country, US is pushing to exchange that product through US dollars. For example, if you are going to purchase, that is import, some manufacturing goods or capital goods from the China to India, usually the transaction happens in the US dollars. So what happens is, if you want to transact with any other country for importing anything, you have to pay in dollars. So you have to purchase dollar first, then only you can pay in dollars. So we have to give the rupee, purchase the dollar and give the dollar to the person from to that country from which we are purchasing. So this is the reason why the dollar is increasing every day and in the long run, because the international market, international world currency has become the dollar. So it is dominating it. So it keeps increasing, and other factors like Fed rate, interest cuts, all these factors, and the trade deficit of the Indian economy, that, and the recently the Fed rate cut. Other than that, the tariffs imposed by the United States of America by Donald Trump, all these factors influence the dollar. And to counter that, what are the measures the Indian government has taken? Indian government recently the RBI repo rate cut, continuously the rate cut given by the RBI is only to counter this US dollar rate only. It was done to counter this only, and the inflation rate has been decreased in India due to various measures taken by the government, like the GST rate cut and income tax standard new scheme, that standardized rate up to 12 lakhs, no income tax. All these various measures and export oriented measures are also given by the government. So all these measures are given by the government to tackle this this threat of US dollar appreciation and rupee depreciation. So currently the position is not impacting India that much, but if this continues, if this dollar appreciation continues in the same rate, it might affect the various sectors. The sectors which are dependent on imports are going to get affected much, like oil and gas. We are importing around 85% of our oil from the various other countries. So in that case, it is going to affect it might increase the prices, and steel, metals, aluminium, zinc, all those precious metals which are required for heavy industries, manufacturing industries, their cost might also increase. Our current account deficit. What is current account deficit? The import and exports, lena or dena, that is how much we have to give to other country and how much we have to receive for our country. All those payable and receivable, if you minus, if there is a difference in negative, that is we have to pay more money outside than what we receive, it is called current account deficit. So we are already a current account having a deficit because we are importing more than exporting. So only if we promote more exporting, then only we can balance the trade. This is also to be focused. Government has to give more measures towards exporting, some more good measures and schemes to be introduced to promote more export, so that we are not highly dependent on importing. We are mostly exporting services. We need to export goods manufactured also from India, then only we can tackle this dollar, because if we receive rupee, then dollars will be sold to buy rupee, then the dollar rate will come down. Like this, other measures available with the RBI are, RBI has foreign exchange reserves in dollars. What they can do is they can sell some amount of that reserves. If they start selling, if you start selling something heavily, the price of that product will come down. That measures can be done by the RBI, but currently it is not required. But in extreme scenarios, what the RBI can do is they can sell the dollars in the open market, so that the dollar rate little bit comes down, and export to be increased, and other measures like controlling the inflation within our country, not relying completely on imports for manufacturing goods in India. All these measures to be done to control the dollar appreciation, these foreign exchange fluctuation rates. So all these measures are already been done by the government. It has to be the government has to keep doing all these things to control it. Otherwise, if this is not controlled in the long run, it may affect our economy and also the economy of the other countries, because the international currency pushed by United States is the dollar, which is dominating the world. So that is why if you see in various news, like BRICS countries are trying to change this dollar dominance. So these are, because of all this, the dollar dominance only, they are trying to do that, but the United States is not letting the other economies to do that. And since it has standardized that already, it is standard that you purchase everything in dollar, so it has become difficult to move from this dollar, and this has led to increase in the rate of the dollar. So these has various impacts on the economy, our current account deficit, our borrowings, the amount which we borrow. If we borrow in dollars, we have to pay more money because rupee has depreciated, but we have to pay in dollars. So if dollars has increased, we have to pay more money. Like the same way, if you are importing some good at a certain price, at some purchase order you are putting at some price, but after you put the order, the rate of the dollar has increased, you have to pay more money. So this will also affect your payables. And one thing good is that India is the largest economy where the funds from outside come to India, that is foreign inflows. Our people are earning outside in the United States, and they send money to India, to their home. That money comes to India in huge amounts. That if that money keeps coming now, yes, it is going to balance it, because if the dollar is appreciating, we will receive more money in rupee terms. So it is a positive thing. There are some positives and negatives. All those positives and negatives should be balanced. If there are more negatives, it may impact our economy. So this has to be tackled by the government through various measures. It is not an easy thing to do. The government has to do all those measures continuously, day to day in their operations. So it is a very critical thing you should analyze for your UPSC examination. Hope this helps you in your UPSC preparation. Thank you.